Doug Casey, the founder of Casey Research, joins me now here at Freedom Fest. Doug, thanks for being with us.
Well, thank you, Daniela.
You're also the author of your latest book, Totally Incorrect. And in it, you examine and look at how the U.S. government, surprise, meddles in people's lives. Doug, can you sum up a little bit about what the book is about?
Called the book Totally Incorrect is a play on politically incorrect, which when that term started being used in the 1980s, I thought it was a joke that you could be politically incorrect. So what I'm trying to do is debunk all these concepts. It's very much as Will Rogers says, it's not what people know that's a problem, it's what they think they know that just isn't so. So I cover everything from why the Roman Empire collapsed to false concepts of education to stuff on the markets to everything.
How do you protect your privacy or try to keep the government out? Do you only use cash? Do you not have a cell phone? What do you do?
Well, I personally don't have a cell phone because you're chained to the damn thing. People can reach you anytime, anywhere, and if you have an advanced cell phone, they can track you wherever you are. So I don't need one or want one. Everybody else has got one. I can borrow somebody.
So I'm guessing you don't have a Facebook account.
Well, very stupid of me, actually. Years ago, when it was starting, somebody said, you ought to have one because people that you used to know in high school and college you've lost track of. Right. And I said, well, that'd be good. And actually a few old buddies have gotten in touch with me. But every day I'm friending all these people. I have no idea who they are. I don't use the thing at all. It's a
You could
nuisance.
have reconnected with Bill Clinton, Doug.
Well, he didn't. We haven't friended each other.
All right, so let's talk about the panel you came off of that looked at getting your investments out of the U.S.
Yeah.
Doug, are you an advocate of this? And B, where are you looking to?
Well, I'm of the opinion that almost all of the markets in the world, not all, but almost all of the markets in the world are very overpriced today, primarily because all of these central banks all over the world are printing up trillions of new currency units, and it's creating new asset bubbles. So there are very few places to put your money today, but one thing I can say for sure is that you have to diversify yourself politically, geographically, internationally, because as dangerous as the markets are, a bigger danger is political risk today. So you have to diversify politically. This is something that Americans and Canadians and have never even thought about, the necessity of diversifying politically, but it's critical. Because your biggest threat is your own government.
So which countries are you looking to?
Well, I've been to 175 countries. I've lived in 12 countries. And every place has its own advantages and disadvantages. I no longer live in the U.S. For years, I've lived in Argentina and Uruguay. And I like them. I think from a growth perspective, the Orient is the place to be. This century is going to be the Chinese century. There's no question about it, regardless of the ups and downs that they're definitely going to have along the way. And if I wanted to go and make $1 billion today, I wouldn't go to the Orient. I would go to Africa. Africa is definitely where the action is going to be from that point of view.
Well, you said you like buying cheap, and that's where you looked at New Zealand in the past. So
I've lived in New Zealand, and I bought a lot of land in New Zealand back in 1999 and 2000 when the Kiwi dollar was 38 cents. Now the Kiwi dollar is over 80 cents. And back when I was buying, in Kiwi dollar terms, land was like free because it was a very depressed economy. Now the land has exploded along with the value. So I'm selling everything in New Zealand. It's still a very nice place to be, but I've been paid for living there with property appreciation.
So you're looking to Africa?
Yeah, but I spend most of my time in South America from a lifestyle point of view, in Argentina, actually, in Uruguay.
You like South America. Do you like Central America?
Trouble with Central America is it doesn't have any class. I mean, Panama is okay. Costa Rica is okay. It's overrun with Americans and Canadians. It's not cheap. Not cheap at all. The only cheap place left in Central America is Nicaragua, and I do like that. They've got a lot of beachfront. It's underutilized. But no, I'm a fan of Argentina for lifestyle, no question about it.
Doug, you also speak passionately about currency controls. Can you tell us a little bit about the risk that lies behind that?
Well, Argentina is a perfect example of that. Their government is, I would say, psychotic. It's criminally insane, actually. So that presents some inconveniences because of their currency controls. On the other hand, I always try to look at the bright side of things, and Argentine currency controls are a reason why it's by far the cheapest nice country in the world. It's sophisticated, it's international, it has the most classical liberal tradition in all of Latin America, and because of the Kirchner's idiotic currency controls, once you're in Argentina, when you buy pesos on the black market, it's like everything is free.
Do you think people will have warning when currency controls come about?
Well, they're coming about right now in the United States because, as you know, it's very, very hard for an American to open a foreign bank account almost anywhere. The Europeans don't want your business, most places in the Caribbean. In fact, almost any foreign bank accounts and brokers don't want Americans' business because it's just too paperwork intensive, it's too risk intensive with the US government. So the door is closing in the US too. There's no question about that. And the next real or imagined terrorist event in this country, they're going to lock it down like one of their numerous new prisons. So it's completely ridiculous when people call America the land of the free. First of all, it's no longer America. It's just the U.S., another nation state. It no longer is distinguished by anything different than other countries.
Doug, let's talk gold now. The last time we spoke was in November in New Orleans. Since then, gold's seen some action, we can say.
It has. It's come down a lot, and I hope this doesn't sound too... Look, I've been buying gold for years, and I continue to buy it because it is the way you save, the way you put capital aside for further use. So the fact that it's come down to $12.50 or whatever it is right now is a marvelous thing because I have an income, I keep getting dollars. What am I going to do with the dollars? Most investments are overpriced and risky. So I'm very happy to be able to buy more gold at this price. I think that the long-term bull market is going to continue upwards. So I don't see gold as something that you speculate in. It's not something you trade in. It's something you put aside to conserve capital, to save. So I'm happy to.
Doug, I know you hate making predictions, but I'm going to ask you to tap into your inner guru. If you had to foresee where gold would be within the next 3 to 5 years.
Well, let me stick my neck out. And as we speak now, in mid-July of 2013, I think that this current bear downturn, which has taken it from 1900 down to as low as 1200, I think it's at the bottom now as we speak. Anything can happen, but I think it's hit the intermediate bottom and it's going to go back up again.
So a lot of gold's volatility has surrounded the Fed.
Yeah.
Are they tapering? Are they not? Do they have a choice? What do you think of what's going on there?
Well, if these people have any concept of basic economics, they don't evidence it. Bernanke and all these central bankers, they're all the same. They're all going to destroy all these currencies. They're really going to create a disaster. Of the deficit that the U.S. government ran last year, $1.2 trillion, most people are unaware of this. I think that 90% of it was not bought by the Chinese or the Japanese. 90% of it was bought by the Federal Reserve. And that is the actual engine of inflation. And they're going to do it again this year because the Chinese want to get rid of their dollars and their U.S. securities. They don't want to buy more. So inflation at some point in the next year or so is probably going to explode on the U.S. catastrophically.
So you see us staying within an inflationary environment because now there is talk of deflation.
Deflation is possible because they're creating new bubbles. I mean, they're almost reinflating another real estate bubble in this country now. That'll collapse again. The stock market's grossly overpriced. If the value of the stock market falls in half, that's trillions of dollars of potential purchasing media that's vanished. So we're on the ragged edge between hyperinflation and catastrophic deflation. I mean, Bernanke should be very scared.
So I love asking my guests who are not fans of the Fed who they would like to see as chairman. So if you had to pick someone, who would you like to see?
Well, look, I've got to tell you that's the wrong question. The Fed should be abolished. The idea of a central bank is idiotic, it's destructive, it's an engine of inflation, it's a vehicle for indirect taxation by the government. So it should be abolished, no question about that. I have no idea who would take that task on. He's got to have basically some kind of criminal intention if he wants to do that. Well, Bernanke doesn't have to worry, he'll be out. And like all high government operatives, he'll collect gigantic book contracts, he'll get corporate directorships, he'll get sweetheart deals, he'll get huge consulting fees, so he'll walk with...
He'll be on Oprah.
He'll walk with $50 or $100 million for what he's done, so he's got nothing to worry about. But pity the poor fool who takes up where he left off.
All right, Doug. Final thoughts for investors watching.
Well, at this particular time, it's very hard to say anything, but you've got to continue buying gold because it's the only financial asset that's not simultaneously somebody else's liability. Very important. You have to learn to speculate because they're going to inflate other asset bubbles. And as we speak right now, I'm going to Cyprus next week because the stock market there is off an incredible 98%, something that usually only happens to Vancouver, not mining stocks. But the 50 stocks traded in Cyprus are down an average of 98%. I'm going to go there for that reason next week. But closer to home and easier to do. I think buying quality junior mining stocks is, I see them as being 1,000% shot over the next few years. They're so depressed. But I'll go back to what we started out with saying. It's critical that people diversify their assets internationally. They must have political and geographical diversification today, and almost no Americans and Canadians have it.
Doug, on that note, thanks so much.
It's a pleasure, Danielle. I enjoy being here with you every year.
Thank you. Totally Incorrect with Doug Casey. Get your copy. Thanks for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com or follow this conversation on Twitter @Daniela Cambone. Thanks for watching.